all these countries, right? Sanctions or not, they want to get away from the dollar tit. Okay, they don't want the dollar anymore. It's clear. It's pretty clear. Okay, and few reasons for that. What are the reasons for that? Right. Um, the dollar has been the world's reserve currency since World War II, right? But a combination of political and economic reasons is slowly chipping away its supremacy. Absolutely. Nearly 60% of international reserves are held in dollar denominated assets, such as bonds, all these things, right? Um, Now, the sanctions against Russia, right, are, as well as China, right? These are not small economies, people, okay? I mean, they're going like, okay, screw your dollar. I don't want your dollar. You can shove it. And um, so when that goes away, watch out. Seriously, watch out. This is not the gloom and doom, but when the dollar loses its reserve currency status, um, then the whole world will figure out that the currency has been toilet paper anyway because of all the printing and spending. God forbid. Okay. But so U.S. monetary policy, number one reason, U.S. monetary policy holds too much sway over the rest of the world. Absolutely. The U.S. is the issuer of the world's reserve currency, which is also the dominant currency in international trade and payment systems, which is true. Basically, U.S. has been it. The dollar has been it. Now there is this push towards going away from the dollar, going to gold, going to Bitcoin. Like, it's not big enough, obviously, but a lot of alternatives are out there for people, for countries to go, okay, you know what? I had enough of this dollar shenanigans. I don't want any of this. I'm just going to go, you know, deal with Russia, deal with Saudi Arabia when I'm buying oil with my own currency. And I don't blame them. I mean, we are it. We hold power because we move our rates up and down. What happens? The whole world, like we catch a cold, the whole world catches pneumonia. That's what happens. Everything depends on us. Well, militarily, it did. Well, we kind of lost that part. Now, economically, it seems like it's slipping away slowly. Um, Now, the number two reason that everybody's kind of walking away from the dollar as the reserve currency is when there is so much demand for the US dollar. Like if, let's say I'm Venezuela, let's say I'm Argentina, let's say I'm these, some of these countries that need dollars because they need to do the trade in dollars and they need to buy oil in dollars, right? So there is constant demand from those countries and that props up the dollar because there is so much demand for the dollars. Well, what's happening is that it gains strength against all the currencies. Look what's happening with the Japanese yen. It's hitting a 30-year high at 157, 158 for the dollar. It was pretty stable about 120, 125, right? 125 yen for a dollar. Well, that's kind of, going out of the, out of style. So the greenback meaning the US dollar gaining strength against most currencies around the world is making imports far more expensive for emerging nations. Absolutely. Right. So if our dollar is getting stronger, that's also going to hurt us, by the way. A strong dollar is not a good thing because we do, believe it or not, we do export a lot of stuff, especially as far as high tech, IT, software, all that stuff, right? We do export quite a bit. We don't manufacture anything, but we do export a lot of that stuff. And for the buyer of that stuff, right, because of a strong dollar, it becomes more and more expensive for them to participate and create economic growth in their own country. For example, in Argentina, right? And the decline in their exports and the increasing prices in their imports is lowering their US dollar reserves, which is creating inflation in their own country. We know what's happening in Argentina, 80, 100% inflation a year. In Venezuela, all these other third world countries, right? Not that Argentina is third world. So now Argentina said, well, screw the dollar. I don't want to deal with the dollar anymore because it's way too expensive. And it's making the goods that I'm buying from the Chinese are, becoming way too expensive because the dollar is so strong. So what am I going to do? Okay, I'll just pay you in yuan. Okay. As opposed to the US dollar. Well, so the demand for the US dollar is going to go down. If the demand goes down on something, what happens to the supply? Supply is still massive. Demand goes down. What happens? price of the dollar will go down. It will get weaker and weaker and weaker and weaker. And once it loses its, reserve currency status, toilet paper. That's what happens. And to sum it up, the third reason, again, the petrodollar risk that we talked about, Saudi Arabia, actually, see, the arrangement was formalized in 1945. That's 80 years ago, when the oil giant country Saudi Arabia and the US reached historical deal wherein Saudi Arabia would sell its own oil to America only using the dollar, and created the petrodollar, so everybody around the world you'd be using the dollar, right? And in return, Saudi Arabia would reinvest excess dollar reserves in US treasuries and companies. See how this circle is kind of closing up on us now, right? Well, they're going to go now, well, we don't want to deal with the dollar. We don't want the trash currency of yours. And we're not going to buy the treasuries either. But at the same time, the Fed has to issue these IOUs. Who's going to buy these? Who's going to buy it? China is reducing their exposure. Japan is reducing their exposure. Russia is reducing treasury exposure. Saudi Arabia goes now, okay, we're not going to deal in dollars, so we just deal with other currencies. Who's going to buy this? Who's going to buy our bonds? That means, the fiscal policy that we have needs to put in order, Washington, okay? So, and summing up this topic is US dollar has been the world's reserve currency for decades, but its dominance is fading, correct? Sanctions against Russia have spurred other countries into considering backup currencies for trade, correct? We've been talking about it for 45 minutes now. And US monetary policy, the strong US dollar. So the other thing that's happening here, people, if the Fed doesn't cut the rates, like, okay, figure this out. There's something called a carry trade, meaning in Japan, the rates are 1%. In the US, the rates are 5%, right? So what are all the hedge funds doing these days? They're going borrowing at 1% in Japan, coming back investing in the US at 5%. So that's sucking more, creating more demand for US assets, right? But then there is the reverse of that carry trade. What's the reverse of that? Well, when interest rates start going down, all that money is going to leave this country and it's going to create a vacuum, whoosh sound, which is not going to be good. But besides that, it's horrible for the Japanese economy. It's horrible. It's making everything more expensive. It's sucking dollars out of their economy. Japanese yen, because that Japanese yen that they borrow at 1% is being reinvested here at 5%. That's called the carry trade, right? That's why the Japanese yen is in the toilet and the US dollar is gaining strength against it because of that interest rate differential, 1% to 5%. So, rates staying high in the US is not only bad for us because we talked about the interest cost on our debt, right? It's also bad for, emerging countries such as Japan's and Germany's, because our US dollar is being bought, but there's massive demand, right? Because what's happening is that if you go to Germany, in Germany, the bond rates for the similar duration are about 1.5%. In Japan, it's just hit 1%. Well, our rates are at 5%. So as a hedge fund, smart guy, I'll go borrow at 1% in Germany. I'll go borrow at 1% in Japan, come buy the US treasuries. But then there is the reverse of that. At some point, that trade is going to be unwound. It has to be, right? Then what happens? At the same time, if the US dollar loses its reserve currency status, when this trade is getting unwound, which is going to start happening if the Fed keeps cutting rates, right? So Fed keeping the rates unusually higher to kill domestic inflation is absolutely going to have global economic ramifications around the globe. So you guys have to start making, putting these dots together, which I do for you, so you don't have to.